Good morning, Paul Georgi from Allendale. It's July 23rd, 2010. The markets this morning appear to be kind of a evening up, taking it easy day, you might say. Grain markets kind of mixed here at the close of the open outcry or the electronic session. Expect things to kind of open the same as they close there in the electronic session at 7:15. The outside markets, dollar now up 1 to 2 ticks. The crude oil down about 68, and the stock market is still higher, up 16 points. Factors affecting some of the outside markets, the main thing is this tropical storm Bonnie that is moving through the or just north of Cuba right now, supposedly going to move into the Gulf area and right into the oil spill area, causing some havoc there, and did cause a lot of excitement yesterday in the futures market. So a little bit of retracement there, profit taking here. It's a Friday. Have had a pretty volatile week, so expect some profit taking in most commodities here today. Weather factors affecting us here in the U.S. It looks like most of the Midwest will get rain, and the hot dome that was touted here earlier is kind of going to stay further to the south. So most of the Midwestern Corn Belt region anyway will be ideal growing conditions. Some areas may have a little dryness, but in general, pretty good situation there. Also, the Drew Lerner, our weatherman, is saying we could see Europe start to get some showers and maybe a breaking of this drought pattern in the Eastern Europe area starting this weekend. So that's something that's going to be monitored very closely as well. The corn market, everybody's focusing on the sell-off we had yesterday. The technicians are saying, oh my gosh, we got a reversal going here. However, the funds and the money flow basically stopped yesterday after early in the session. Will they be back today? That's what we're going to have to monitor very closely here. It looks like we've got some pretty good demand in the corn market on these setbacks. However, a key chart area is the 385 in the Dees contract. I think if we take that out and close below that on a weekly basis, it seems to me like we're going to see some more stops being hit here on the downside if we do that later in the session. In the wheat market, which has been the leader of the grain complex, a couple factors there. You've got the weather in Europe that's being a concern. Canadian prairie weather is also a concern there. They've continued to be wet. That doesn't bode well for the wheat harvest that they're getting into here very soon. So wheat still appears to be in a nervous situation when you look at the overall weather, but profit taking there. We went up and tested the January high yesterday in the September contract at 610. 610 now is resistance level, and support in the September contract of wheat we put at 572 3/4. The soybeans, not much to say there. Weather looks good for the soybeans right now, although we all know that we need rain in August to make a bean crop, so we still got some concerns ahead of us there. But technically, we've got support at 962, resistance at 992 in the November beans. We're probably going to trade within that range here today. In the livestock trade, we did have a cold storage report out yesterday. Normally it doesn't mean much to us, but I think this report has a little more impact in that when you compare the supply of meat from June of this year to June of last year, we're only 87% the amount of beef in storage, and pork is at 76.7% of a year ago level. So you can see we've got tighter supplies of meat. Weather is causing weight loss or the lack of weight gain in the cattle and the hogs, tightening up the supply here, and providing some help as far as the product goes. Cash cattle, we did trade some cattle yesterday, I guess at 94, 95 range in the south. The cutout values mixed yesterday. Choice down 24 and select up 25. Technically in the cattle we got resistance at 92.80 and support or resistance at $94, support at 92.80. In the August hogs, we've got resistance at 90 or 82.90 and 79.47. Cutout values there were higher yesterday, $1.48. 100-day moving average on the charts is just above the market here, so kind of watching that. If we can close above that 100-day moving average here on the end of a week, could be positive there and get some further buying kicking in at the hog market. So if you got any questions, give us a call here at Allendale. We'll be happy to answer any questions you might have. 800-262-7538. And we wish everybody a very successful trading day. We'll talk to you Monday morning. Thank you.